All right, it is an early Saturday morning. Welcome to the Dividend Doggo channel here on YouTube. And we're going to go over a couple of things this week. First off, it's an early Saturday morning, so markets aren't open. And I want to go over just a couple of things because this week was a wild week politically, news-wise, stock-wise, just a super wild week. So I'm going to go over a couple of quick things. My buys for the week. I'm going to show you exactly what I bought. I'm going to kind of discuss why I bought it, when I bought it, and we're going to look at that position now and see what's going on with that for this week. Obviously, I am a dividend stock investor primarily. I do hold a large amount of my portfolio in other accounts in growth stocks, primarily via 401k and via an additional brokerage account. But today we're going to specifically be focused on where I'm putting my money for the future and my dividend growth portfolio. And I do consider this a dividend growth portfolio because I expect that the dividends will grow from this portfolio significantly over the next 10 years. Now, with that said, I am a newbie on YouTube. I've taken some advice and done some mic upgrades this week and got some filters going, so hopefully things sound a little bit better when you have your volume higher and there's a little bit less feedback and white staticky noise in the background. And yeah, let's get into things. So first things first, you're going to see exactly what my gains were, what my earned dividends are for this week. Why are they $1,000 for this week? We'll talk about that in a moment, but let's talk about the market gains first off. This week was a radically charged roller coaster of emotions with the stock market and political news and things going on in the world. First things first, these gains were completely not really expected to be happening this week. This is pretty wild to me to get a 1% jump this week, and it was a little bit of a roller coaster at the beginning of the week, but wow, did it take off through the middle point of the week. And I'm just going to briefly go over what things look like here. Healthcare kind of stayed flat. Consumer went down just slightly. I'm going to pop into this so you'll see that this is one week. Disney went down a little bit. Coca-Cola had a massive dip, and I don't expect this position. This position is even overall. It's actually a little bit still in the green as far as market gain goes, but wow, is it struggling with the coronavirus news. And even Starbucks and Pepsi both hit pretty significantly. This portfolio was kind of carried by the gains of Mo here. This was kind of an interesting week for them as far as smokeless news and their what is it? Their flameless heaters. There's a little bit of hype surrounding the official election going to the Democrats, and I'm not going to get too political on this channel at all, but there's a bit of excitement for legalization of marijuana, and Mo has a stake in that. So there's a little bit of excitement around that. This is one of my highest yielding stocks as far as dividend goes, and the reason that the dividend is when I go back out, you'll see that there's an earned dividends of $1,000. That's because that's coming in, I believe, for this week. So that payment from them is going to be a little over $1,000, which I'm going to talk about in another video how I'm going to disperse that, but I'm not going to be dripping that back into Mo. I've got that position where I like it, and I'm going to start diversifying that out into a couple other stocks. One of the big ones that I want to talk about is what was my buy for this week. I put my money down pretty hard on doing one big buy. This is my first buy of 2021, and it's an investment into the banking industry, into finance, and it's into JPMorgan Chase. I love this bank. As far as the big banks go, I think there are few higher quality choices to put your money into right now, other than JP Morgan. Their plan to do buybacks for 2021 is pretty wild. I think that there's going to be a pretty good spike. And you can see that I put this money in on January 4th. I did this buy at the very beginning of the week. And we're going to look at and talk about what that actually meant. I'm going to show you exactly, this is how many shares I bought, at what price I bought them. I got 109, almost 110 shares with that $14,000. Now, I wanted to make this buy before the ex-dividend date. I will have to pay taxes on the dividends that come out of this at my regular rate. I won't get the qualified rate until the next set of dividend payments in the year. However, this pays out this month, which means that these dividends are going to roll right back in this month very rapidly. So that's a pretty large purchase, and I completely understand that the majority of my viewers are going to be people that are new to buying stocks and will not be able to buy large chunks of stocks and will have to dollar cost average into positions. My conviction on going into finance for 2021, simply put, is they're in a very strong position to get through the downturn that we're seeing with a lot of the stock market and a lot of the areas that are hurt, such as Coca-Cola with their restaurant industry being massively hurt right now. They're in a really good position, even with housing market problems coming up. They've got plenty of capital to back up not only a dividend raise this year, also their share buybacks at an estimated $30 billion in buybacks this year that we're going to see. I think that's going to raise this price up significantly, and that's why I put my money there. I will be doing other buys throughout the month. Obviously, I've got some dividend payments coming in that those are going to go into, but we're again still looking at the 1 week gains. So at the beginning of the week, you saw me put that money into JPMorgan Chase. JPMorgan shot up. It was beyond my wildest expectations that it would be a capital gain here of $1,800 and go up 7.5% on the 1 week here. Now, that said, the higher yielding one here was Bank of OZK, which you can see I have a scheduled trade going into. I have a little minor position sell that was a short-term buy that's going to fund that, but I will be buying more of the Bank of Ozark. That is a phenomenal position as well in the finance sector. These are my top 3 picks for finance, and I had built up the Bank of America position over 2020, and I'm going to continue to build both JP Morgan and the Bank of Ozark up a little bit more. Now, overall, my average price on my JP Morgan shares is $123.74. I think that's obviously, if I had been buying this earlier on in 2020, I could have had this share price at a much lower area. However, I think that the dividend yield is exceptionally safe. I think that the trading ratio, the PE ratio for price to earnings, is pretty solid for a bank. I think that this is going to get an increase and a little bump this year as far as the yield goes. But I'm also looking at it as this is going to be a high capital gain yield for the rest of the year, I think, and going forward into 2022 and further. Now, my estimated dividends here are pretty solid to me. This yielding about $175 every quarter should be a phenomenal path to growth. That means that it's going to drip in. I'm going to specifically drip this money back into JP Morgan shares, hopefully buying about 5 shares. I'm hoping that it stays in the 140 range for at least a few months so that I can get some more money into this before it kind of skyrockets from share buybacks, because I do think that's going to happen at some point. I could easily see us getting another 5% out of this stock in the next couple months as they start scheduling the buybacks of shares, and that's going to be amazing. Ideally, I want to get my share position for the stock to 300 shares. That's just kind of my goal that I have in my head for this position over the next year or two. I have a couple other positions I want to raise up as well, but as you can see, this has already started to appreciate pretty significantly. I could see a pullback on this happening within the next couple weeks, depending on politics and the various stock market swings that could happen. But I think that it's well positioned for the next year. So that was my first big buy over the course of the next couple months. I'm going to try to get a couple more of these relatively large chunks of money put into these positions that I want to raise up. A couple of them that I want to raise up, I'm going to go back into consumer real quick. I want to raise these positions here. I want to bring up Costco and Home Depot pretty significantly. Costco had a little bit of a ramp up in December, and this week it had a little bit of a downturn, but I think both of these companies are what I would consider boring stocks. They're boring dividend plays. They're low yield, high growth, long-term plays. And some of my viewers may know this, but being in my 30s, I've got a long time horizon ahead of me for these positions to really elevate themselves over the long haul. Ideally, I would like to get both of these positions up to about $20,000, and I don't think I'll do that in the course of the next year, but maybe over the next 2 years, I'll get these positions built up to that. These are very solid positions that will continue to grow over the next few years. All right, and so the next thing I really want to focus on for today's video is I want to focus on another position that I've put a lot of money into over the past month, and that's going to be in the utilities sector. I'm very bullish on VST, and it had an amazing week, as you can see here. The 1 week returns on VST alone are just staggering to me, that this went up 6.76% in 1 week. I expected this position to stay in the low 20s or around 19 for at least a couple of months. However, I think the cat's out of the bag on this one. I think there's going to be a lot more news reporting, especially with them opening up these large battery energy distribution hubs, especially partnering with PGE in California. These are major utility companies that are going to be using them to supply battery power for solar storage and energy use for consumers. They're raising up their residential, their market for residents is skyrocketing. When you go in and you look at what their growth was for 2020, they're primarily focused on getting more residential customers. They're doing a lot of big business plays. They've now brought up the largest battery bank in the world, is my understanding of it. And that's expanding even further going into August. It's about to raise up. Just that single battery bank is going to grow significantly. And I was looking over the plans for this last year, and my speculation of this is that we're going to see a massive transition of this company over the course of the next few years into being more of a green or a cleaner energy play. Because right now they still do a lot of coal production, and they're transitioning out of that. But you can see that when I bought this position, I went in at $18.89 was my average share price, and I put down a large sum into this position because I have a strong conviction on this company doing absolutely fantastic things, and their plan to roll forward their dividend and raise it over the course of just the next 2 years is really what got me excited at this. Now, when I bought into this position, it obviously wasn't $21 a share. So this dividend yield for me is actually around 3%. And I was very comfortable with putting that money down for the long term and earning that 3% dividend yield over the next 2 to 3 years. And their plan is to raise that dividend up pretty significantly over the next year. And then another raise is projected to come forward for 2022. So that being said, having a really good expectation for what your dividend yield is going to be changed to and what you're going to earn on your money is one of the things that I like most about investing in stocks. Knowing that they've got a plan that is set forward to both pay down debt and do share buybacks and give me back money via dividends, that to me is just it's a triple whammy. It's just a fantastic play to go forward. And what I was talking about is the Moss Landing phase, which is not fully complete, but you can see that there's some news articles down here that show that, that's brought up the world's largest utility scale battery energy storage system online. That's a mouthful. But this is absolutely wild. I did not expect this to fully go live in December with its first phase, and the second phase is coming in August. So I expect some more news articles about this to be coming out. I think that this is going to be an easy sleeper hit over the next 5 to 10 years. I think this position could easily take the yield from what I bought it at 3% to a 4 to 4.5% yield over the course of the next 10 years. And I did want to mention that, a lot of viewers on YouTube may see these large positions and be like, well, I can't get that now, the stock is going up. But if this is what it's at now, I think that it's easily going to project possibly into the 30s over the course of the next 5 to 10 years. This position could be a very safe sleeper hit for growth. And I do plan on adding to this. I want to go back in here real quick. I'm going to add, that's my dividend doggo barking in the background. I want to add to this another 920 shares. My goal for this is 2,000 shares. So that is a very brief overview of what's going on this week, what things were up. Energy was significantly up. Utilities were up. EPD is significantly up this week as well. I think oil plays are going to start coming in heavier. As you can see, I don't have a lot of my money in oil, but it's something that I'm dabbling in and I'm trying to learn about. I definitely think that VLO, Chevron, and EPD all have very, very strong futures. The pullback into oil's not going anywhere. We're going to be using it for at least the next 20 to 30 years. The rate at which we use it hopefully will be decreased over time. However, partners like EPD are going to be used to transport that oil. Pipelines and things like that will always be needed. Oil's not just going to go away. It's used in so many different products. The last thing I wanted to talk about is the dividends rolling in. My kind of plan to roll in, a few of my dividends are going to roll out to Costco. I'm going to load Home Depot, Costco, and VST. Those are my 3 priorities right now. I'm going to be rolling the majority of my other companies like AT&T, which is a large payer. EPD is going to continue to build. I'm going to talk about those positions kind of weekly as they come in over the next couple months. The forward yield for this portfolio is right about $20,000. So I'm going to hopefully get that up to right around 24 grand is my goal for the end of 2021, meaning that the forward projection for 2022 is going to be 24,000. So I want to do that. I'm going to go over my 2021 goals real quick. I want to do that by growing the investment portfolio by $100,000. I want to do that primarily by investing about $60,000 directly into the market. I'm going to raise our dividend amount up, but we're projected to get 20,000 of that money directly in via dividends. So that money is all going to roll back in. I don't plan on taking any of that money out over the course of the year. Now, the other thing that I want to try to do is I want to try to max out IRA contributions as well as 401k for this year. Those being, for my wife and I, that's a pretty significant amount of money to be allocating ahead of time. So this portfolio is a taxable account. I'm going to try to add a total of $38,000 to this account over the course of the year. Right around $3,200 a month is my goal. As of right now, I've moved over 2,000 to get ready to put in for this month. Everything else was from 2020 that went in already. So I'm hopefully going to do another buy order before the end of the month for about $3,200 plus the dividends that are rolling in, which should be about $1,400 to go. So that's kind of my forward look for the end of January. I'm going to be putting my money into Home Depot, Vistra, and Costco. Those are the positions I'm going to try to raise this month. As far as 401k goes, most of that is index funds. That's just going to go in the background. In a future video, I might talk about what those positions are, what's held in those stocks, because those index funds are pretty broad. Then I'll talk about IRA also this month. That's one goal that I want to try to work on building up. I didn't do a whole lot of investing in IRAs over the past few years. I have maxed mine out for 3 years now, so it's starting to build up to be a decent sized position, but I do want to talk about why I'm doing that and what my goals are with it. Right now it currently holds some REITs, but that's all going to be in a future video. So if you enjoyed this and you want to see more videos like this, either weekly reviews, monthly reviews, stick around, hit that subscribe button. Give me a thumbs up if you have any questions for me. I can usually be found directly on YouTube. I'll try to respond, but I'm also hanging out most of the time in Joseph Carlson's Discord channel, which you get access to as a Patreon member for his channel on YouTube. As you can see, if you're a fan of his, which most of you probably are, my entire pie structure is literally off of his. I used his referral link to set up my portfolio when I did it about a little over a year and a half ago. So that's where I live. I live in that Discord most of the time, talking about finance stuff, talking about savings rates, real estate, the future of Disney. We talk about a lot of things over there, but most importantly, I just wanted to give that little shout out. And everything that I've done structure-wise for M1 is based off of Joseph Carlson's portfolio structure and his inspiration to get me to start this portfolio and try to get something going here has been pretty phenomenal over the past couple years. So I just wanted to do a shout out there and a big thank you. I will talk to you in another video soon.